Hi, good morning if you're on the West Coast. Good afternoon, I suppose, if you're on the East. This is Aaron Lacey, and you're listening to a webinar series brought to you by jointly by Thompson Coburn and McClintock Associates PC. Today we're going to be talking about the department's new audit guide. During the webinar, 3 top secret code words will appear. We will try to make sure to point them out for you. You should write them down because you will need to provide them in the verification form that was included with your login instructions. If you have questions, CLE questions should come to Thompson Coburn at CLE-PC@thompsoncoburn.com. And all CPE questions should be directed to the following phone number, 412-257-5980. If you didn't catch either one of those and you need them, you can always just email us. And also, please remember that if you are listening to this right now, but it is sometime after the original webinar date, it's possible that law and guidance have changed. So please always keep that in mind. Finally, an electronic survey form will be sent to you following the webinar. And as I always note, we deeply appreciate folks taking the time to fill those out. We do a lot of webinars here, and the feedback helps us make each subsequent webinar better than the one before, or at least that's the hope. So let me go ahead and tell you just a little bit about the presenters. I want to start by talking about Mike. So Mike is, first of all, Director, Audit Department at McClintock and Associates. McClintock, if you don't know them, is one of the very small number of firms in the U.S. that really specialize on doing or in doing audits and accounting services for post-secondary institutions. They really know their business, and Mike is extremely involved in the post-secondary portion of what they do. You can see here we've got 3 bullets listing the kinds of things that they do. Some of you may know McClintock already. Services include financial statement audits, Title IV compliance audits, which is what we're talking about today, uniform code audits, general regulatory consulting. So if you're going through substantive changes, change of ownership, things where analysis of your audits is appropriate, that is exactly the kind of thing that McClintock does, as well as due diligence services. They specialize in diligence, accounting, and regulatory issues, the kinds of things you all, particularly in the career school and for-profit sector, are familiar with, like 90-10 calculations, composite score ratios, and again, planning for post-secondary substantive changes, things is where your accounting and your balance sheets become something you want to be thinking about. And their clients include all different kinds of post-secondary institutions. I will just say I've worked with McClintock a great deal over the years. I personally will express my gratitude to Mike and McClintock because I think they were a great partner. I have been impressed and appreciated their partnership. And I will also add, just as a final note, that I have gotten to know Mike quite well over the last few years, and on a personal level, he is a great guy. So if you're looking for an accountant for post-secondary type issues, please don't hesitate to reach out to these guys. Mike, I thank you for being here today to talk about this for us. So just moving on very quickly, those of you who have tuned into these webinars may know me or know our firm. This is Thompson Coburn. We are a law firm. I am a lawyer in the higher education practice here, and we do all kinds of regulatory work for post-secondary institutions, as well as litigation, transactional work, and other types of things, and focus, among other things, on Title IV in particular, and what comes along with Title IV, like Clery Act, consumer information, things along those lines. So with that, I will turn it over because we've got a lot to talk about today, and I'm going to shoot it to Mike to lead off.
Thanks, Aaron. I appreciate the kind words and also being able to present to everybody today through Thompson Coburn, and want to thank everyone for taking the time out of their day. I'm sure you're all busy and have other things to do, but we want to spend an hour or an hour plus with Aaron and I. What we want to do is just give a high-level update of the new 2016 Department of Ed Audit Guide. There's certainly going to be a lot of detailed questions we can't cover today, but what this will allow you to do is identify areas that may be the biggest risk for your institution in regard to expanded audit areas or new areas your auditors are going to have to look at, looking at your processes, and figure out what questions you need answered from your auditors or other attorneys, consultants, and CPAs in the industry for nuances. There's a lot of changes in the guide, and so we want to just get those in front of people. We're 6 months out before it's effective, but it's certainly not too early to start talking about the audit guide and having detailed discussions. So the audit guide, obviously, this is applicable to for-profit schools. If you're a nonprofit that's on, I think some of this guidance could be relevant just for you to know. Some of these rules could come down to the Uniform Code single audit, so it's certainly relevant. It could also be items Department of Ed will be looking at if they come in and do program reviews. And we've seen some expanded program reviews at traditional schools as well. So we believe this audit guide has merit to the entire post-secondary industry. Where the audit guide has expanded its focus, we've put into these three categories. One is there are some specific student compliance items that Department of Ed has identified certain compliance issues to look at or certain sample sizes and specific items that they want the auditor to look at. And we will talk through those items. There's expanded institutional eligibility and what we call non-student compliance items. And Aaron's going to get into talking about those items in more detail related to placement rates and gainful employment. And then I think what you'll see from this audit guide, Department of Ed they've got some continual decrease of student compliance risk, in our opinion, as Department of Ed has instituted NSLDS over the years and the verification data retrieval tool. This allows them to get better numbers up front, to get transfer information between schools, to get the ISO right using the data retrieval tool. So I think there's less risk from an audit standpoint. But where has been all over the news the last number of years is certainly placement rates, gainful employment rates, and this is where Department of Ed has expanded the focus of the audit guide. You know, think of it as disclosures that the public sees, and obviously that's information they're not privy to on a daily basis, and so that's where they've asked auditors to review for oversight. And so these changes were not unexpected from our position. In the guide, there's 4 specific areas of focus that we've identified. One is the 90-10 calculation. That is the only item that specifically relates to the financial statement audit. Student file testing, a few areas, gainful employment, and then a catch-all area Department of Ed calls administrative capability. That's kind of the area where they don't know where to put anything else. They throw it into that category. So let's talk about the effective date of the guide. So this is for audit periods beginning after June 30th, 2016. Thus, any fiscal year audit period beginning on or after July 1st, 16 will be covered by the new audit guide. So obviously, all of you going through an audit right now or soon to be 12/31 year ends, this guide is not applicable for you. Schools with a June 30th, 2017 year end will be the first group for which this audit guide will be applicable. And so we're talking 6 months. Those months are going to go fast. And so we recommend that you begin discussions with your auditors and your attorneys now in regard to some of the items that are applicable in this audit guide. I kind of wish they would have made it to the 12/31/17, so the June 30 clients would have had a full year to consider this audit guide, but we didn't, and this is what we have to deal with, and I don't think it's changing. One other quick note, there are some slides in here we're going to skip over. We did this presentation for a state group last week, so if you see me skip a couple slides, they're just things that aren't as critical, and they're there for your information, and we can talk about them offline if somebody would like to.
So the first secret word is audit. Audit. There you go. Make sure you write that down.
So let's get into the expanded focus of the new audit guide. And the first area is the 90-10 calculation. In some ways, I can understand what OIG and Department of Ed policy wants to accomplish. I think they've taken this too far. It's going to cause a lot of audit, call it, risk and just some unease between auditors and clients. But nevertheless, it's the standard that's in the audit guide, and thus we have to follow it. A couple of the requirements that have changed is the school must prepare the 90-10 calculation. The auditor is prohibited from doing that. And that was in the draft audit guide that came out a few years ago, around when gainful employment first came out. And so we were expecting that to come back and whenever the guide was issued. We do feel that the auditor can compile the footnote. So if you've done the calculation, you've compiled all the different buckets, and we're merely just filling out the footnote. We just see that as part of the audit financial statement drafting process, which is a allowable service that we can do, with certain documentation. And so we don't think that's a problem, but the calculation itself has to be done by the school. The auditor must determine if the calculation is performed on a student-by-student basis. So the Department of Ed wants to be certain that every school is performing their calculation fully in accordance with the presumptive rule. For those of you who know the 90-10 in detail, this is highly important once you start exceeding 85%. If you're at 50%, it's really not that critical of an item, because the chance of you failing, if you're at 50, 60, even 70%, if you do the calculation, what we call the aggregate, and not on a student-by-student basis, is unlikely to fail. But nevertheless, the department has said that it must be done student-by-student, and we've actually emailed OIG and got confirmation that that is what they want. So I think every school has got to set up their student information system or set up an Excel template to compute the calculation on a student-by-student basis. I think the biggest issue in this area is that if the auditor discloses or discovers any misstatement in the overall rate, we must disclose that as a finding in the financial statement audit. So this doesn't become a finding in the financial aid audit, but a finding in the financial statement audit. And as those of you who know the 90-10, who know well that having small errors is not uncommon just because of the nuanced and the detailed calculation, especially when you have to do it student by student. The department has also said that the auditor has to indicate what we think the 90-10 rate will be. So this becomes a bigger audit area for auditors. If we have an error, do we have to test more to determine is the overall calculation still correct? We've got to test more students to determine, what we think the rate may be. So does that mean a statistical sample? Does that mean testing everyone? I think that will depend on the school and what errors that we find. And I think it's also an area that just will cause some rub between schools and auditors. You can have a small error. Let's say you're at 70% and you're a half point off. The auditors have to report that, even though going from 70 to 70.5 really has no bearing on the audit and has certainly no risk for Department of Ed. But the OIG has confirmed that any misstatement must be reported. And again, I think if you're above 85%, I understand department's concern, but you get rates below 80, very small differences just aren't a risk. And there certainly would not be an audit risk from our general audit standards. But basically, the Department of Ed has said there's really no materiality when it comes to auditing and reporting on the 90-10 calculation. So this is an area, we have some areas, proactive planning. This is something schools want to start looking at their systems and talking to their auditors now to be certain the calculations are being done correctly. The second area is student file testing. They've done some expansion in the number of files to test. They've done some expansion in the certain attributes, and as you know, they require us to look at to perform student confirmations. So a couple notes. When auditors test the student files, those of you who are involved in the process know that we make our selections from two populations group. There's population group 1, which is your people that are enrolled, who have graduated, or have taken an LOA. And we have population group 2, which is people who are dropped, withdrawn, terminated, you may call them suspended, but basically didn't finish. And they're not on the LOA and they're not active. Those two buckets have not changed, so those are the same. We're going to look at the minimum sample sizes for each bucket because that has changed. And then the Department of Ed wants auditors to perform student confirmations. They want us to confirm certain information with the students, and we will talk through what those items are. So first thing under student files is sample size. The population has changed. So for each bucket, the bucket of the active and grad people and the bucket of your dropped and terminated people, we have to apply the universe that's showing up on this page. So if you have 250 or more students in each of those buckets, we now have to test 60 files from each bucket. And those of you that were larger schools under the old audit guide, we were probably testing 75 files. In most cases, that was 50 from your active grad, and it was 25 from your dropped and terminated bucket. So right away, you can see the file selection has gone up significantly. For those of you who won't max out, you can see the universe range in between 100 and 250, 25 and 99, and 25 or less. What I do find odd is that for very small schools, that if the universe is 25 or less, then you have to test every person. That seems overly burdensome to small schools, but that's what the requirement is. So if a school maxes out at 120 files, that is a 60% increase in file testing from what you had done under the old audit guide. We have taken all of our 630-16 clients and 1231-15 clients and have rerun the sample sizes using the new audit guide. And the number of files that we test will go up 40 to 50%. And we've talked to some peer firms in the industry, and their results are exactly the same. They're in the low 50s to 40% range. So I think that's a pretty good number that you need to expect that, that the files can go up by. And I think one of the bigger risks in this area is we will be testing more files from the dropped, withdrawn, or terminated files. 10 more in a lot of cases of the active graduate, 50 under the old guide to 60 under the new guide, but we're going from 25 to 60 for many schools in the dropped and terminated. And many of you know, we'll talk a little bit about this later, that's just increased risk of findings with drop students due to the additional work that has to be done on them. A couple minimums. I mentioned earlier there's a few student attributes that they want covered under the student file testing. So there's really 4 of them. One is we have to test at least 5 students subject to verification. I think that is pretty easy. I can't think of many audits we don't get at least 5 students subject to verification. So that shouldn't add any time. We have to test at least 5 students enrolled in distance education, and we believe that is people who are enrolled solely in online programs. So if you've got an on-ground and they take some classes online, that's not what OIG is looking at. These would be solely people in distance ed. Again, if you've got large distance ed programs, getting 5 people would probably be selected normally through the auditor selection process. But that's just one piece of information we're going to want to know up front just so we cover that whenever it is applicable. I think these are easy items to cover unless you're a very small school and maybe you don't have 5 verifications in the normal sample size. At least 5 students subject to the NSLDS transfer student monitoring process. The department wants, because of SULA issues and overlapping loan and overlapping academic years, they want auditors to be looking at these items. That's an area we're still working to identify how we'll know those students up front. We know these students have to be reported to NSLDS for transfer monitoring, but we're working through with schools what reports to pull that we'll be able to see who was subject to this process for the audit period. So when we make our selections up front, we'll be able to select these 5 students. And then they have a caveat going back to some just approval of the educational programs. They want the auditors to test at least 1 graduate from all eligible programs. So if you have 5 programs, we need to test at least 1 graduate from all of those eligible Title IV programs. But for this test, they're only defining the academic records. So if we pick 4 students, say you have 5 Title IV programs, and we pick graduates from 4 of the programs, but we don't from the 5th program, we don't feel we have to test an entire additional financial aid file. We just need to test the academic records of a graduate. And I think what the department is getting at is they want to be certain people are actually graduating from programs, that attendance records exist. For those of you subject to clock to credit conversions, or you have a diploma program that rolls up into an associate degree program and you're not subject to the clock to credit conversion, that you actually have students graduating from that associate degree program, because that's one of the requirements under those clock to credit rules. So I think this could add a little bit of time, but again, if we plan up front and we know what program students are in, we can be certain we can try to get graduates from all the programs in our initial selection size. So this is some of the proactiveness you want to work with your auditor in advance of year end. The last area under student files that the department is now requiring auditors to do is to send student confirmations. This was in the old audit guide. The language indicated auditors should send them. It wasn't a requirement. When OIG, excuse me, when OIG would come in and periodically look at our papers, which they do, they would do a quality control review at times, and would ask us, do you send confirmations? We have not. We would just document our reasons why, of which the response rate was expected to be low, and that we had, could verify a student's, identity through testing the file. And so the OIG would accept that documentation. But they've now said you have to send confirmations. So we have to send positive confirmations, which means we have to get them back from the student. It means we can't just send them and say, send it back if it's wrong. It's a positive confirmation that says, please send this back confirming the information on the confirmation is correct. There's a sample confirmation wording and log, and the confirmation wording has to be used as the department indicates. So they're asking students to confirm information such as period of attendance. They're asking for the Title IV aid they received. They're asking for, did you receive certain consumer information disclosures, for example, crime reports, completion grad rates. And so the students have to send those back, and auditors have to get a 30% return rate. And we're one colleague firm that does send confirmations, and their return rate is nowhere near a 30%. They've done it for years. So we don't think there's any way, likely in most cases, students are going to return confirmations that we get a 30% return rate. So which it means then auditors have to go to alternative procedures. One would be phone calls. We could call students, which is something we really don't want to get into doing. Or the second thing is we can perform review of personal information and a review of attendance records. So what we are expecting we'll do is we will send the confirmations via email to students, maybe send a second request, and then go on to the alternative procedures of reviewing personal information and attendance records if we don't get the 30% return rate. We do feel that the personal information and the attendance records are information we already look at during our audit, so we don't think it's going to create additional work at that point in time. It's just information we will be certain we look at and document it as part of our student file testing, so we can say, hey, we perform these alternative procedures for everybody, and so we're certain that we've have met the steps in regard to the confirmations.
Mike, Aaron, do you have to attempt the 30% to achieve the 30% first and then make a determination to move to the alternative procedures, or can you proceed right out of the gates with the alternative procedures?
Correct. So Aaron's, there's a good setup for the next slide here. Aaron's question, unfortunately, you can't default directly to the alternative procedures. The department says you must attempt the confirmations. It doesn't define the number of attempts. And so that could be auditor judgment. Do you at once, do you attempt it twice, do you attempt it 3 times? That will come down to the auditor's judgment. But you can't just punt and say, we know the confirmation response rate is going to be bad, I'm just going to do alternative procedures. That is not allowed. So there is going to be additional time for auditors having to send the confirmations and maybe possibly follow up once or twice. But I think what auditors in schools want to be certain is that the alternative procedures are performed when the student file testing is done, and then if you haven't got your 30% return rate, response rate, then the alternative procedures will be done and auditors can just move on at that point.
So they don't have to be sequential. You could start both at once.
Correct. Yeah, that's all right. So it doesn't say you have to, and I'm guessing you'll confirmations, you can't give student file selections ahead of time, which has been the rule for years. So I can't really send confirmations to the week we start testing files. So what we would do is send the confirmations when we start file testing, do the alternative procedures as we're testing files, and then just document if we get the 30% rate or not. What could cause auditors a little bit of extra time, though, is confirmations you receive back that have discrepancies. I mean, those of you at schools, I think you'll realize, I think students are unlikely to return these confirmations correctly. This is not a manufacturer where you're confirming the accounts receivable balance at year end. If I had to do a confirmation in college, I'm not sure I would have answered all the questions correct either. And so if you get a couple back that the answers are wrong, or they say, I didn't get the crime report, the auditor's going to have to make a judgment to say, is this really a problem, or is this just a student not remembering? Or if you have a lot of responses that say, hey, I never got the crime report, then that could cause some concern on the auditor that, hey, the crime rate was filed with Department of Ed, but maybe it wasn't given to the students, or maybe it wasn't emailed to everybody. And so the confirmations response could raise questions about consumer information and how well it's being distributed, which could lead to other findings or other audit work to vet that, yeah, it was done, and maybe students just aren't doing a good job. They just don't remember all the disclosures you have to give them, which is quite voluminous. So I think that's a risk there, especially these first couple of years as we're walking through the results of these confirmations. So this is one I know auditors pushed back on hard in the last audit guide, trying to give our opinion that confirmations don't really provide a lot of comfort from our standpoint, but we lost that fight, and so it's something we're going to have to work with. The next main area is gainful employment, and so I'm going to turn it over to Aaron to talk about some of the new audit requirements in this area.
Thank you, sir. So you all will recall in the realm of gainful employment, just thinking broadly here about the framework, there are sort of four big buckets of responsibilities that you have. One is obviously the debt to earnings rates, right, and trying to satisfy those rates. One is reporting information to the department, which is what they use to calculate those rates. One is making disclosures, and you've got the standard disclosures you have to make to all prospective students going forward. That's your gainful employment disclosure template. Remember, that's got to be in your marketing materials and elsewhere. And then you've got the student warnings that you have to make if you've got a program that has failed or has spent 3 years in the zone. In other words, any time that you might be a year out from the program becoming ineligible, you have to start telling students. And then the last thing was the certification. Remember, you have to certify that your gainful employment programs meet certain standards. So the new audit guide has directed auditors to really focus on reviewing and verifying that you are managing your reporting and disclosure pieces correctly, right? So the rates, the DE rates, you've got all that process and back and forth with the department. The auditors aren't going to be looking so much at that, and the certification's not so much in that area either. The real focus is on your reporting obligations and your disclosure obligations. So the first thing they're going to do is they're going to review the information that you've submitted by the October 1st deadline. You recall every year you've got to report the most recent award year gainful employment data to the department by October 1st. That's gainful employment and campus security reports, October 1st. What the auditors are actually going to do is utilize the sample of students that they've pulled to test the information reported. So in other words, they're going to look at actual student information out of the files and then compare it to what was reported to the department to see that it ties together. There's a need to test the entire sample of students. So that's all the students, not that you've got, but in the sample that the auditor pulled. And Title IV funds not reported by the school to the department. All right. Placement rate reporting also will be verified and reviewed by the auditor. So you all will recall, and this is tied into your gainful employment disclosure template, you are required, if you have a state or accreditor that mandates that you calculate placement rates, you are required to include those and disclose those as part of the gainful employment disclosure template. And if you have an accreditor and a state that both require you to calculate placement rates, you have to include both of those in your gainful employment disclosure template. So one of the things your auditor is going to be doing is looking at the way that, verifying that those placement rates were included, and then also looking at some of the supporting detail to look at the nature of the calculations. I'll just take a step back here too and mention it is both public information that there have been some, at least the outgoing administration was very focused on placement rates and used placement rate concerns as a foot in the door for initiating compliance reviews with some of the publicly traded institutions, and again, much of that is in the press. I can also tell you that in addition to those you've heard about publicly, the Department of Education has sent various forms of inquiry to a number of other institutions, asking them to produce information related to placement rates. So at least with regard to the outgoing administration, placement rates has become a point of significant concern. How did you calculate them? What did you say about them when you disclosed them? Did you disclose all of the methodology? Were the calculations accurate as reported in the template, et cetera? So it's been an area of focus. Whether the incoming administration will continue to be as focused on placement rates is hard to say, but clearly it is part of the audit guide. I'll also take a step back and just say, and Mike and I have discussed this, and Mike, feel free to comment, of course, but it's hard to know. Certainly with the incoming administration, we expect some of the rules, the more controversial rulemakings like gainful employment and borrower defense to be either challenged by a new department or challenged sort of by the department and the Republicans in Congress. But it is very difficult to know how soon that is going to happen and exactly how it will unfold. And the audit guide is even sort of a step removed from that, right? I mean, you've got this question of whether the incoming administration and Congress will try to do something with some of these rules, but then there's the audit guide that's sitting there. And so long as it is sitting there and considered enforceable, the auditors are going to have to use it going forward. I would assume that there's the possibility that you will have to comply with this audit guide for some months into the future. It could take a while, even with an aggressive new administration trying to deal with some things and change some things. It could still take a while for that to shake out and down to the audit guide. So we think this is really important information, and that for the time being, schools should be prepared to comply with this and work with their auditors to comply with this audit guide, even understanding that in 24 months or 36 months, eventually you could see some changes.
Yeah, and I would agree with Aaron. It took 20 years to get the last audit guide. And even if something like gainful employment gets a pause for the ramifications and no enforcement of it for 1 year, they say they push all the sanctions down the road 1 year. I don't think that changes the audit guide as far as it's in there to look at what you're disclosing and what you're reporting. So I think that could even be a more likely scenario for gainful. So I do think we have to move ahead as if these are going to be effective for the foreseeable future.
So disclosures, we talked about looking at the content of the placement rates, about what you're reporting to the feds each year on October 1st. Auditors are going to also review the GE disclosure templates to determine whether all of the information is accurate and complete. We know that there have been folks at the department who've periodically been reviewing these, either randomly in connection with recertifications or other types of substantive changes. But there really has not been, and also in the context of your periodic program reviews, for example, but there really hasn't been a methodical, deliberate way in which the department has been reviewing the accuracy of the information in these disclosure templates, and that now it is here. So it's going to be done through your annual audit review. So you will want to make sure that you are updating that information timely each year and that the underlying information is complete and accurate. The other extremely important point to make here, and we'll reiterate this at the end when we get into sort of the tips section, is make sure that you can back all of this up. Don't just do it and then lose track of the records. If you're required to make disclosures, make sure you keep documentation showing that you made those disclosures, that you distributed things. Make sure you've got some way of demonstrating to your auditor that underlying data is present and supports what's in the disclosure, and that the disclosure was actually provided to the appropriate parties at the appropriate time. Doing it is one thing. Being able to demonstrate to your auditor that you did it, or to the department during a program review or any other third party, is another, and you really need to be thinking about both. Determine if your disclosures are in a prominent position, and sample test the online completion rates is something else that, so remember, they're going to be looking at placement rate information. You also have to include on-time completion rates. in the disclosure, and the auditors will be looking at those calculations as well. Student warnings, so just a reminder, if you had a program that failed this year under the final DE rate, you had a final DE rate that was failing for a program, you have to start making the student warnings for these programs next Wednesday, February 8th, unless you filed a notice of intent to appeal and that was recognized by the department. In which case, as long as the appeal is pending, you are not required to make the student warning. But if you had a failing program, again, and you did not put in a notice of intent to appeal, you are required to start making the student warning disclosures next Wednesday, February 8th. So please make sure that you are ready to do that. I will emphasize, even if the department were to suspend enforcement of those disclosures, I still think there is exposure between now and next week, I should say. I still think there is some exposure for a plaintiff's attorney to come along and say, well, federal law still requires that you make this disclosure whether the department is enforcing it or not, and you failed to do so, and that's a violation of our state Consumer Protection Act. So I think even if the department is one thing, but you also, when you're talking about federal disclosure requirements, need to be aware that there could be ammunition for a plaintiff's attorney in a Consumer Protection Act case. And that requirement, if you had a failing program and you didn't appeal, starts next Wednesday. So please be thinking about that and preparing for it. Your auditors will be looking at whether and to what extent you have appropriately made these student warnings. They'll be ensuring that the warning includes all the required information. There is specific language that they have to include. The GE disclosure template has to be updated with the warnings within a required 30-day time frame. They'll be checking to see that that was done. And then they'll select a sample of students who were currently enrolled to make sure that they got the warning. So you have an obligation to disclose the student warning not only to prospective students, but also to current students. And what has to be included with the warning is a little bit different depending on whether or not it's a prospective student or a current student. And the auditors are going to be looking at all of that. They'll select a sample of students who enrolled in the GE programs after the date the school was required. So these are your prospective students, right? The warning requirement goes into place, and then these folks enrolled later, and they'll be making sure that they got the warnings. And then finally, and this is surprising to us, the department actually wants auditors to determine whether or not the school provided warnings to prospective students who did not ultimately enroll, right? So they're going to be looking at, your auditor is going to be looking at the date at which you were first subject to make the student warnings, and then they're going to be looking at 3 populations, right? They're going to be looking at a sample of folks who were currently enrolled at that point to make sure that they got the appropriate warnings, folks who subsequently were prospective students and then actually enrolled to make sure they got the warnings, and they'll be taking a sample to make sure that you actually made the warning to students or to prospective students who did not ultimately enroll. And I think what the department is getting at there, you have an obligation to make the student warning at first contact, in addition to complying with some other timing requirements. So I think what the department's really trying to make sure is that not only are you getting the student warning to folks before they enroll, as required, but also that you are satisfying the first contact requirement, or a vendor or marketing professional working on your behalf is satisfying that requirement at first contact. And so this is the way that they're going to audit that. Oh, and then, Mike, I'll pass it back to you for administrative capability.
Yeah, so thanks, Aaron. So the last area that, we've talked about 90-10 and the student changes and then gainful employment. So the fourth area is administrative capability, which is kind of the catch-all area. We are going to have to get third-party contracts and review those in a little more detail to be certain that they have all of the required language that's in the CFRs. This has become a big issue for Department of Ed, is, who's a third-party servicer? Do they have to have audits? And that's really on them, but certainly defining who is a third-party servicer. So I think this would be an item that will take more time the first year, and then if contracts don't change, this could take less times in the future. But we will be trying to get all those contracts this go-around. One of the areas that really causes some stickiness for auditors is that an expansion of incentive comp testing. So if a school uses a contractor to recruit for admissions enrollment and or the awarding of Title IV aid, the auditor is required to test that the contractor is not paying incentive compensation. And we've specifically asked OIG, is this just the revenue stream between the school and the contractor, or the payment of potential incentive payment by the contractor. And they said it is the potential of incentive payments made by the contractor. And from talking to Aaron and other attorneys, the contracts and the contracts between the schools and a servicer or contractor allow auditors of the school to have access to the contractor per the CFR regulations. So they definitely have to allow a school auditor to access to their records. If they don't, it's a scope limitation. We have to say in our audit that we could not test this and put specific word in our opinion that this specific item we could not do. The concern is, if 50 different auditors contact, one servicer or a recruiter, they may finally say, listen, I'm not going to give access to 50 different auditors. So as an auditor, we do have some options. We could rely on their normal auditor if their normal auditor did the incentive comp testing and provided some information to us, and we could get comfort with the firm, especially if it's a firm in the industry. We could rely on them as what's called a component auditor. The other thing is a contractor could go out and just have an auditor come in and bless that there's no incentive comp payments. Do what's called an attestation, agreed upon procedures engagement, and then just hand that out to any audit firm that requests it. And I think that would give auditors of schools reliance as long as we would have comfort with it. So there are some options here, but what's hard is, we're contracted with the school, an institution, not with a contractor. So it's really going to take schools pushing back on the contractor to say, listen, what are you going to do to help us in this area, because we don't want a scope limitation in our report. And obviously I think contractors and servicers are going to be aware of this, so those are discussions that hopefully will be ongoing at some of the industry trade shows coming up, and just you should be having with your third-party servicers as applicable. Crime report, this is a hot area. We have audited this for years, but a new step in the audit guide indicates that we need to obtain the source documents for the crime reports. So normally now we get them, we look at them, we compare them to what you've distributed, we look at the crime report compared to ED, but we have not got the backup support documentation. And most of us are not criminal justice majors, nor are most people at institutions, so it's going to be some judgment as reviewing these as compared to the accuracy. But we need the backup, though, to look at, does it make sense what you've distributed to your students and employees, what you've uploaded to the Department of Ed, the crimes seem to be consistent. So it's a little bit of additional audit work for auditors, and reporting that, as Aaron said, you got to be certain you're keeping the source documents for your crime stats from the police departments, that we can take a look at those.
Now, Mike, I'll just throw in a quick note. I know a lot of people probably get pretty crummy feedback from their police departments. I've seen, emails that just say nothing to report. It's also really important that you send the written inquiry that you send to the police department, and that it properly lists all the things that you're requesting, so that if the police department responds, we've got nothing to report, you can tie it to the request and say, we properly asked for all of these things, and so when the police department came back with its one-liner, we understand that means that none of these things occurred, right? If you don't have the thing you sent to the police department showing what you asked for, and all you saved is the one-liner back that says nothing to report, it would make it very hard for the auditor, or for the Department of Ed, by the way, if they're doing a program review, to validate that your statistics are accurate or represent what they're supposed to represent.
Yeah, good point. Another item that's fallen under administrative capability is reviewing schools' procedures on approval, disbursement, and delivery of Title IV funds. They indicate schools should have written procedures or written information. I would say it doesn't have to be formal procedures book, but memos, documentation. We're supposed to compare how the activities are actually performed based upon the audit work completed. So your procedures may say X, but you may be doing Y. That's a very broad area. I don't know if we're going to look at every single item there. Where I think this could really come out is when we have findings, that especially it's more than a one-off finding. That could be a very good example of where your policy said we're going to do X because they should be designed to prevent findings. And then they're not occurring because we've had 5 of 20 exit interviews weren't done or weren't done timely. So I think that's a good way we can look at saying your policies say one thing, and your results are saying another. And then as we build out our recommendations in the financial aid audit report and also in your CAP, we could expand upon the differences between what you said and what we saw. I think this is where I think we intend to work that into our report, unless it's just a glaring difference that you say we're doing it this way and we just note through our audit that you're not doing it that way. Even if there's no findings, I still think that creates an issue now because you're not following your procedures. They want to confirm auditors have written policies and procedures for student verification process. And those of you who have had program reviews will know the department's been very hot on dates and COD agreeing to ledger cards, and that's specifically in the audit guide now. Job placement rates, if used in advertising, so this is different than the gainful employment disclosures, but if you use them in advertising, they must be audited. So going back to what Aaron said, we've got to review and verify the information on a test basis, getting that source documentation, kind of like we do now for completion and graduation rates. Look at the methods that are used to inform prospective students prior to enrollment and all the disclosures there, and any state licensing requirements that have to be disclosed as well. As Aaron said, this has been a hot area. This is certainly something not under Title IV department, so it's kind of continuing to pull career services into the audit as well. Aaron, anything else to add on job placement rates?
No, I think that's it. Just the critical point here is to note that, you've got the placement rates that you're required to calculate by your state or accreditor that go into your gainful employment template, so that your auditor is looking at that. If you have a success rate or some sort of internal rate that you calculate that uses a different methodology, it may be different from what your accreditor or your state require you to calculate, and you advertise that. What this means is your auditor will also be reviewing your internal rate, whatever you might call it.
As far as site visits, auditors have to visit all locations, at least right now every other year. They've made some tweaks to that. Some locations where the majority of work will be performed or where administrative functions are material to the Title IV program, where the awarding of Title IV is occurring, need to be visited yearly. So we're thinking if people have corporate offices, those may be the places you have to go to every year, or if you have a centralized location that's doing the bulk of the Title IV work, you have to visit there every year, and maybe not every single location. If you are processing everything decentralized, I think auditors are going to have to visit every location every year. So that's just additional out-of-pocket, additional time. So I think it's one of these things, looking at your processes and talking to your auditors in advance of the audit. We're going to have to go through this with every client to be absolutely certain where we have to visit and where we don't have to visit for these June 30th audits. Because that would be a big issue when you're going to release the audit report, all of a sudden identify and saying, we got to go to 10 more locations. That's going to hold up the report going out. Audit guide talks about reconciling direct loan records. This has been a hot issue for a while, and they specifically put that in the audit guide that you must reconcile direct loan monthly. Hopefully most of you are doing that. They want to know that their records and your financial aid records and the business office records all agree or are reconciled and changes are in process of being done. And there's a little bit of expanded testing looking at information in COD in regards to the excess cash testing. So we don't see these areas as really any new work, or if it is, fairly minor. So the impact to a school, the last couple of sections, Aaron and I can go through quickly so we have time for questions.
Second secret word, capability. There's our second secret word, capability. Go ahead, Mike. Just want to make sure people thought.
So as far as the impact to a school, obviously increased audit fees. We have new areas, GE, job placement, crime stats, expanded audit areas, student files and confirmations. And we don't have exact numbers yet, but we're thinking the increase in workload is a 50% increase in workload. How that comes out in fees, I think we're working through where we can continue to be efficient. So all those costs we don't intend to pass on, but those are things we're still trying to talk through as a firm. And then potential out-of-pocket costs for annual site visits, depending on what locations we have to visit now. It certainly causes additional cost for a school if someone's got to go visit those locations. There's increased time to gather and obtain the information, and some of this is coming from other departments. So it's just all the more reason to start this process sooner and start looking at all this additional information you need. And some of it's new. You know, what do we need for the source documentation for GE? You know, what do you have for the placement rates? Just looking at each school and saying, yes, this is the information that we'll need. This isn't an area like COD or FISAP where you say, hey, just give me the FISAP. And source documents for one school for placement could be different. Your GE reporting may have similar files that we can use, look at as far as the backup you uploaded to NSRDS. But again, it could be a little bit different, and we want to certainly vet that before we get into detailed audit rate. And I think it's going to cause just more communication internally across institutions and their departments to gather this information. There's more information that could just cause the audit to take longer. We've got to receive it, we have to process it, we may have questions on it, and that just causes more work, and it could create a longer audit cycle, which I know we don't always like, and nor do our clients. Student confirmation, you know, obviously can slow up the process. You certainly want to be certain the alternative procedures are done. You don't want your auditor to come back after field work and say, well, I didn't get a 30% response rate, now I have to do A, B, and C. That's got to be planned up front and be proactive. And then I think just more discussions. If there's discrepancies, if there's more findings because of the R2T4 calcs, we've looked at more, you know, going through crime reports, the source documents, looking at placement rates. There could just be more discussions with institutions saying, is this right, is it wrong, walk me through why you did it this way. And you know, especially the first couple of years for the new areas, that you know, kind of we get a good handle on how you're doing things internally. But that could cause more findings and harder discussions between auditors and their clients. Increased findings is certainly a risk. You know, those of you know, when we test the drop, withdrawn, and terminated population or bucket, whatever we want to call it, I mean, those people are just more likely to have errors. They have R2T4 calculations, they have refunds, post-withdrawal disbursements, you have to do NSLDS updates, your exit paperwork is occurring at times that you're not planned for it. It's not like it's a whole graduation. You've got to do them as people drop. You could have drops and re-enrolls, especially for non-term schools that get complex, final periods of enrollments for people that have dropped and come back. And so there's just more risk of findings, and I think we're just going to see more findings because lots of cases we're going to be doubling at least the number of people in that population. And then just increased regulatory oversight from Department of Ed. So it's, you know, one of the things we think of is since they've increased the sample size, they actually lowered their materiality threshold in the audit guide as far as expanded testing if material non-compliance exists. So it could be that maybe they'll have schools do less file reviews. They may just take audit results and extrapolate it and say this is the Pell error or this is the direct loan error. So that could be good for some schools. It could be bad for others. But I think it could also lead to more regulatory oversight if you're having more findings in the audit. And then, of course, 90-10, as we talked about, you know, having to report any discrepancy is certainly something else that's going to put you on the radar from the financial statement aspect.
Testing is our third secret word. And, yeah, we'll run through here at the end just some final thoughts for you, which I think many of them have probably already occurred to folks. Read the audit guide. I'm looking at my producer. Can we attach that when we send out the follow-up? It's a PDF. Can we send out? So we'll send out a copy of the audit guide to everybody who signed up for this webinar, so it'll come out to you as part of the follow-up from the webinar. Read it, identify questions or concerns, communicate to other departments that are going to be involved. As Mike pointed out, you're going to need more verticals engaged now to get through this audit process. And then most importantly is reach out to your auditor, reach out to your auditor, reach out to your auditor. If you've got a June 30 close on your fiscal year, I would suggest reaching out to them sooner rather than later because, you know, there are going to be folks who wait and who are reaching out to the auditors in the last minute or at their traditional time, I'll just say, and the auditors are going to be trying to get through these new processes, and then they're going to be trying to get through the new processes with those folks. if you start early and coordinate and communicate with your auditor, it will only be to your benefit. It will almost certainly make for a more efficient plan as you get through this. You will be more likely to get there on time. You will have more opportunity to work through everything and to make sure it's done correctly and to minimize findings, all those kinds of things. But I would please just urge you to reach out to your auditor sooner rather than later. Information gathering and testing, you know, figure out what your information system can provide. In fact, what I usually suggest is, I've done this in the past for other things. I think this could be very valuable going forward for audits. Create what I'll call a data flow. So you want to set up a document that has or lists essentially every piece of data, or at least categorically the data that you're going to have to provide to the auditor, and then you want to annotate it to indicate where that data is going to come from: student information system, career services file, student financial aid file, and which department in the institution is going to provide it. And this serves two great functions. I mean, one, it helps you obviously coordinate, figure out which verticals need to be involved, get them to the table, and have a strong understanding of where the information is going to have to come from that you're going to provide to your auditor. The other great thing is, next year when you start this process over again, you don't have to bicker with other verticals about who's responsible. You pull this document out and you say, last year when we did this, FA provided this document, career services provided that one, this was pulled from the student information system, and it'll speed things up. So I call it a data flow, you call it whatever you want, but the idea is to figure out how you're going to gather that information and who's going to be responsible for it. Identify your third-party servicers. So you know, if you don't already know, you know, who is a third-party servicer? Do we have a contract with them? Are those contracts current? Because you want to be ready to provide that as required. Do you need an external third party? Not your auditor, but someone else to help you out. So to review 9010, to review Clariac compliance, things like that. I mean, our firm does things like that. There are other compliance shops, other firms that do things like that. But if you feel like you might be behind in one of these areas, you might want to think about who could help you get up to speed before your auditor starts coming in and kicking the tires. And ensure supporting documentation for the new audit has been maintained and agrees the published information. I'll even broaden this to, again, the point I made earlier. Make sure that you are documenting compliance with disclosure and distribution requirements. So with that, we'll go to questions. Let's see. I'm going to read them out if we have a few, and then we'll get, I suspect, Mike to answer them. So first, Mike, when you say a school, just generally, when you use that term, are you talking about OPE ID number?
Yeah, so well, kind of both. The audit guide applies to, you have to do a financial aid audit for each main OPE ID main location. So if you've got two main OPE IDs, you have to do an audit for each one. I also, you know, school can also mean generically, we talked about just communication across your school and your institution, whether you're one location or multiple locations.
All right. Let's see. When you are talking about earlier the student confirmations, and we understand the response rate, the required response rate is 30%. Is that overall, or is that a required rate of 30% of enrolled and not enrolled? How does that break down?
30% of our sample. So we'll make our sample selection from those two buckets. And let's say you max out in both buckets. So we're testing 60 active graduates and 60 from the drop bucket. So we have a total of 120 students. You know, our 30% rate is of that 120 students we have to get back. Great.
So would a third-party administrator like Global be included in this testing somehow? How would the third-party servicers be involved?
Yeah, I think so. It mentions the incentive comp. We think of it mainly from an admission standpoint, but it also talks about the awarding of Title IV aid. So the question comes back to who's doing the awarding. Is it really being done by the servicer, or is the awarding being done by the school with the servicer doing back office? And that comes back to the contract. And so I think if the school can document that you're really doing the awarding and the servicer is just processing that Title IV aid, excuse me, then you probably don't have to test incentive comp at the servicer. But if the servicer is doing the awarding, that also falls under the incentive comp rules, and then in that case, I think they would be subject to the audit requirement. Because what the department's looking at is someone enrolling students and getting paid incentive comp, or are they awarding Title IV aid and getting paid incentive comp on that? So financial aid does fall under there. It's just not as, it doesn't come up in discussion points as much as admissions does.
Excellent. If we can document that we reached out, this is a campus crime question, if we can document that we reached out to the police department and they don't respond to the request for crime statistics, is this sufficient to show that our local police statistics are not available? I'll answer this one, Mike. I'm interested in your opinion too, obviously, but trust me, I sympathize. I know dealing with local police sometimes can be extremely difficult. I've had huge metropolitan police departments that must be getting these requests from, a large number of schools still tell me that they didn't have the crime statistics available, which of course is not true, and we've had to push them. My advice to you would be, I would push several times over. I would not want to put in one request, and if I didn't get an answer, and I'm really thinking in terms of, say, a program review or an audit by the CLARI, the enforcement division or something like that at the department. I mean, I would want to be able to demonstrate to them that I made significant effort to try to get the crime statistics. And frankly, if it was my view or my understanding that the police department did not have statistics available, I would want the police department to verify that in writing. I would not want to represent to the department that the statistics were not available, and the way that I know that is simply because I didn't get a response. Let's say it that way. I would want a positive confirmation from the police department that statistics are not available. Mike, do you have thoughts on that?
Yeah, I would agree if you can. When you come in for an audit and you're trying to audit something that's not there, it's difficult, and so it opens up questions, and I think it just provides more security. And I would agree with you, especially on if there's a CLARI Act review. I think you want to have that. Do absolutely everything you can to try to at least get a response saying we don't have them, and you've got it in writing from the police department.
But to the person who asked that, trust me, I sympathize. I ran this for a large school group with a lot of locations for years, and it was a challenge. It was very frustrating. So this is a related topic, Mike, and I'm very interested to the answer to this question. ACICS schools that are switching accreditors received an addendum to the PPA which indicates compliance audit expanded reporting. Has the department provided guidance to the auditors on how to perform this expanded reporting?
Yeah, and we have, I don't have the dates exactly in my head, but we got guidance back from a couple case teams that has said those expanded samples are not effective yet. And so they're not effective for the 12/31/16 audits, and I don't think they're effective for the June 30th 17 audits. I think they go into effect for December 31st 17 audits. I believe what the email said was they're effective January 17, but that meant audit periods beginning January 31st 17, because we were really worried about trying to get these new steps in now. But I'm pretty certain, if you want to reach out to me later, we can confirm that. But I think it's 12/31/17 audits. Those steps will have to be, and they're working on what those additional items are going to be. I don't think they have them all gathered yet. So that's not an immediate concern. Definitely not for the 12/31/16 audits, nor for the June 30th upcoming audits.
All right, this is our last question, and it's a pretty technical one, Mike. I apologize. Someone else just put in a new one, so we got a couple more. The students inputted on NSLDS transfer monitoring lists to be tracked expire after a certain period of time. Currently, unless the financial aid administrator prints out the monitoring list during each semester, there's no way to pull a date range report that would have the required information. Or there does not appear to be any way to do this. And I guess the question to you, Mike, is that your understanding, or what would be the workaround?
It is, because that is our understanding, and from talking to schools, we've been trying to figure out if there's a way you can get the whole year, but our understanding is they do terminate after a period of time. We've asked the OIG that, and they said their response was schools should be maintaining a manual list to show that what they entered for NSLDS transferring was complete and accurate. I don't, again, you could certainly just exclude people from that list who you didn't enter. I don't know why that gives you any more comfort. So I think we don't have a great sense of exactly what we're pulling yet for these students, because we're having trouble finding out how we know everyone that transferred for an entire year. This is an area I think as we get into the June 30th, 17 audits, it may just take some working with the schools and to see what other ways or how else can we identify students that may be transferred in to, and maybe if we can identify students that transferred to the institution, then we can double check if they're current, are they in NSODS transfer monitoring, and if not, was all the age still correct, that there wasn't any overlaps and duplication of loan payments. So this is an ongoing one that we're having trouble figuring out how to audit it because of the exact reasons stated.
Last question for you, Mike. If you could just repeat the who will be subject to this new audit guide. So we talked about that in one of the earlier slides. When do you all start using this thing?
So this will be effective for all for-profit schools for our June 30th, 2017 year ends. So anyone who has a year end right now, 12/31/16 through May 31st, 17, are not subject to this audit guide. But for the schools that have a year end June 30, 17, it will be effective for them.
There you go. Hey, thanks to everyone for tuning in. We know this is a lot to assimilate and process, and that it's a complicated topic. We'll get the audit guide out to you. The slides are available. We'll have this webinar up, like we say, recorded version, probably in a couple of weeks. You can go back and listen to it again, parse it a little more slowly if that's helpful. And keep on the lookout. Remember those gainful employment distribution dates that are coming up, February 8th. For the student warnings, it's next week, next Wednesday. If you did not put in an appeal, March 10th is the deadline to submit alternate earnings appeals, and then April 3rd is the deadline to start making the new gainful employment disclosure template disclosures on your website and your marketing materials and to your students. As always, we appreciate you tuning in. Would love to hear from you, love to hear your feedback, and look forward to the next one. Bye.
Thanks, everybody.